Hey, good afternoon, risk managers. It's Dan Sugar with TrendlineBreak.com. I'm going to start doing a series of 3 to 4 minute videos on some basic tenets of some rules and tools active investors and active traders need to implement to be successful. So, my first one's going to be what exactly is a trading method or a strategy and why you need one, right? So, in my web classes and my 5 hour master class. I have this PowerPoint slide, 5 things you must know for success. And the first one is, as you can see, you need a proven strategy with an edge and the discipline to follow it. So it's so important to have a strategy or a methodology that you're looking for on your charts in order to execute trades that have above average reward, above average probability, and good risk reward setups. You can't just fly blindly from the seat of your pants and watch Jim Cramer, Mad Money, or read the Wall Street Journal and just buy blindly. You're going to increase your odds of success with a proven strategy and methodology. So here's several of them. Let me pull this down here. I come up with so you've probably heard of moving average crossovers, where you have two moving averages, and when the short term crosses above the longer term one, buy signal, and vice versa for a sell signal. They can work. They are lagging, but a lot of people use them. They get you in a little bit later, but they can definitely make money. MACD, moving average convergence divergence, also a trend following indicator, but again, that's lagging. It's using old data, so it might be a couple candles behind, or a couple minutes, or a couple hours. RSI, relative strength index, and stochastics. You heard of. You can use those for overbought, oversold. But again, those are lagging. Those are on those. The data is taken off of live data and spits it out, and then it's going to be lagging. So it's behind a few minutes or a few hours, depending on what time frame you're using. You can also use RSI and stochastics for some divergence when price makes a new high, but it's unconfirmed by your oscillator. Those are called divergence, but again, those are lagging. The only two that are leading and not using lagging data are going to be Fibonacci retracements and extensions, and trend following, which is my forte, of course, if you've been following me and know me. But Fibonacci retracements, they have those Fibonacci numbers 0.38, 0.50, 0.618, etc. So if you establish a bull market, you can buy those pullbacks to either a 0.38, 0.50, 0.618. But the trick is, when does it stop at the 3.8 and go back up? When does it go to the 5.0 retracement and go back up? And when does it go all the way to the 618 retracement and then go back up, for the bull market? And then they have the extensions as well. And then for me, trend following and trend lines, they've been around for over 100 years, proven, back tested. Hedge funds, banks, institutions have been using them for a long time. I learned my trend following and trend line strategy from a very successful hedge fund trader. And uh, he took $1 million hedge fund to $1 billion in 10 years. Some of you have already heard that story a couple times, but it is true. I was in his trading room for 3 years, learning and studying and trading with him, Richard Scalone. So anyway, it's really important to have a strategy, a methodology, and successful investors and successful traders, they focus on one methodology and get really good at it. They specialize, right? You don't want to be a jack of all trades and a master of none. So whichever one you decide to choose on and back test and study and really learn it inside and out, up and down. And it might take weeks or months. Get some education, get some knowledge, read, watch the free YouTube videos, but really, get some solid education somewhere about that particular strategy. They all involve risk management, position sizing, of course. But when you have a methodology and a strategy, it makes active investing and short-term trading, whether it's day trading, swing trading, or position trading, when you have a methodology and a strategy that's back-tested, proven, it generates several low-risk, above-average reward opportunities. You want to get really good at it. Okay, so keep on the lookout for more educational videos on the social media channels. And again, if you have any questions, Dan at trendlinebreak.com. Say hello to my big bear friend who likes to get involved on the camera once in a while. My big Bernadoodle. Hi, Bear. Thanks, everyone. See you later.